What's happening, guys, is the 23rd of January, and a few things have happened since I think this went out in mass, because I don't believe this has gone out in mass yet. You guys, if you're not subscribed, you're not seeing it. And I know that ours, quite a few subscribers, but not as many are watching it. So I think this mine might actually go out through the mass email. We'll see what happens, but we'll talk about the market. But what I want to talk about is thank you. Those who picked this up, thank you, thank you, thank you. We hit number one new release in a couple categories. One was ethnic and culture. I'm not a real cultured son bitch. And then as far as ethnicity, I'm a half-breed hairless. I had a Hispanic mother and Irish English father. So it's that. But somehow this did number one new release and number one new release in business, which is freaking awesome when you look at the business books that are out there. So thank you for those. And I got several reviews. You guys are badasses. Those reviews kick ass. Make me really, really feel good about things that people were willing to put 5 stars. And hopefully you didn't feel like I was wrenching on you too hard to do that. But this has been quite the adventure, and I think it's only getting started. Now let's get into the market, what's going on. Well, no, one thing you may not know, if you haven't been getting videos, more than likely, I'm no longer where I was at before. I'm now with North American Financial out of Vegas. I am now the Executive Vice President of Investment Lending. What does that mean for you, the real estate investor? For the longest time, as a loan originator, you just have to take what they hand you for product and whatever the underwriters are going to tell you how they interpret those guidelines. Now, in the current position, I can still help my clients. Not a problem. If you're a client of Aaron Chapman's, we're still going to get you taken care of. You're still working with my team. We're running the whole division now. The difference, we now get to go in and talk with the investors who are creating the loans and help them. This is what people are out in the street are doing. This is how they're doing it and why they're doing it. And you start asking questions as to why their guidelines are set a certain way. We get to help them understand what you, the investor, are doing versus what maybe somebody is not so understanding of investment is doing, and how their adjustment to those guidelines might benefit them as well as you. So this has been a huge move for us, huge move for you, pricing wise, product wise, monster. What we can do for you is way better than we were ever capable of doing before. So thank you to Greg and Kyle, North American Financial. This is going to be a badass opportunity, and all the team over there. Just come give us a shot. You'll see that we can do some awesome stuff. And we've only been here a couple of weeks, so wait till we really get our feet underneath us. As far as the market is concerned, I'm going to show you some things that you probably heard a lot in the market about what's happening in mortgage-backed securities and bonds and all this kind of stuff, and rates are going down. But I'm going to let's go backwards. Let's go way backwards into some stuff. I'm going to show you guys a share screen here, do some explanation so you know what's happening and why. So here is we're going to see the mortgage-backed securities when the interest rates were very low. From here in 2009 all the way up until 2021, when everything went down. Now, you see me shade this. I've talked about these lines before. Right here, I'm going to zoom in on this so we can talk about it again. I want you guys to be very, very aware of what I'm staring at and why. And you may already know this, you may not, but I want you to see it. Here's what we're looking at. In 2008, we had them announce quantitative easing. As you can see, this is a full trading day in 2008. I blocked that. I went from the opening right here to the close. Now, it traded high, it traded low, but this is the opening and this is the close. I marked that out. I shaded that. I drew these lines to reference the bottom and the top of that trading day. And then here is the day they started quantitative easing. The Fed started putting money in. Then everything above that represents federal money to drive those interest rates down, pushing more capital in to lend out. And look how steep those climbs were. This all had to do with $16+ trillion going in there to drive those rates down. The supply went high. The demand was not as high as the supply. That's why the rates were really as low as they were. Then they did quantitative tightening, which is they stopped putting money in. You saw it fall below those levels. These are the levels that I believe the value of the security is without monster capital coming in from external sources. You've seen all this volatility from 2022 up until 2025, September 2025. Monster volatility, huge swings. And then what happened? What happened? Why did the volatility smooth out? Well, during this window of time, we had the government shutdown. So this volatility right here went pretty damn minimal. We don't have all crazy news coming out. It's mostly bullshit. And then you get right here. This is that shaded spot. This is what I'm showing you. This is that shaded area that shows you the quantitative easing, where it was announced, where it ended, that starting day. This is the day that they actually started quantitative easing. This is the price of security. Look at this. Every time we hit it, we bounced off of it in some form or another. Oh, I moved that line, damn it. Okay, so we bounced off of it in some form or another. We came back, bounced up to the top, went down, top went down, bottom went down, top went down, bottom went down, went up to the top, and backed off. Why did we break this top here? Why did it break that? What happened? If you look right here, this was January 8th. What was announced January 8th? Trump came out and said 200 billion coming from the GSEs, Freddie and Fannie. That's what pushed it above that. That's why it stayed above it. The next day, rocketed way up and pulled back. And guess what? It's settled into the market. That's not a big deal. 200 billion. Plus, we don't even know how they're going to apply it. We still have Bill Pulte, who the head of the FHFA is going to direct how that happens. We don't know. So what does it do? It goes right back down in here. So until we get really good, solid evidence, not only going to release it, but then keep going and actually dumping more money, we're not going to get that low interest rate. We're going to stay here. We're at the rates where we're probably at the best rates we're going to see without monster capital being driven in by a government or large entities. That's it. So if you're thinking you're watching the 10-year, oh, what's the 10-year going to do? 10-year doesn't matter anything, guys. 10 years is people investing capital or institutions or some right now the damn Fed into buying government-backed bonds that have a 10-year lifespan. Then they get paid back. This is a 30-year mortgage, not even the same time frame. So people saying watch the 10-year. It's just because it's another bond that's published. They want to see our money's moving to bonds, are they moving to equities, are they moving to precious metals? Don't even get me started what's going on with precious metals. But that's where we are right now. We are not seeing rates go down. They're down from where they were back, I guess, in December, but they're higher than what they had been. So if your lender's telling you, oh, the rates are going down, they're sideways, guys. And it's really going to only move like 0.25% in cost, a 0.5% in cost per rate, hardly anything. Don't sit there on your ass and wonder what's happening. Yes, it's gone up from where it was peaked out at, but it's also down from where it was bottomed, significantly down. We're in great shape, so don't waste your time. We'll talk more about it. You want to know more about it, you reach out to me. Also, go grab your copy of Redneckonomics. You go to quitjerkingoff.com. You go to aaronchapman.com and click on books. You go to Amazon. And those of you who are writing reviews, you 5-star people, I love you. And I got something special coming for you. Take care.